Hello everyone, friends. If you are holding HBAR or just looking at it, today's episode is mandatory for you. Why? Because right now, as we speak, HBAR is trading at the 9-cent level, 0.09. It might seem like an ordinary number, but there is a real battle hidden behind it. We are seeing the market digest the January volatility, and a decisive moment is arriving for HEDERA. Analysts are shouting about a potential rally to 14 cents in the coming weeks, but there are also downside risks. Today, we will break everything down. Why is the 0.09 level the last line of defense for the bulls? Why is this specific price point a gift right now? What signals are the MACD indicators sending? And why has January 2026 left us with important clues? The main event of the month, HEDERA Dev Day in Denver, which starts in just 2 weeks, on February 17. What should we expect from it? And of course, we will analyze the technical stuff. What is the virtual mega map? And how is the Hello Future Apex Hackathon changing the ecosystem right now? Get comfortable, brew some tea or coffee. We are beginning a deep dive into the world of HBAR. Let's go. Block 1. Market situation on February 5, 2026. Let's start with the dry facts to understand the context. Today, February 5, we see that HBAR is consolidating. The price is frozen around the 0.09 area. If you have been watching the charts for the last week, you notice that the market in general is a bit out of breath after a stormy start to the year. In January, we saw bursts of activity. By the way, historically, January is often a growth month for HEDERA, averaging up to 38% returns. And this pattern partially played out, giving us momentum, but now we have hit a ceiling. What do the technical indicators say? This is where it gets interesting. I looked at the latest analyst reports, including Peter Zhang and forecasts from CoinCodex. The situation is two-sided. On one hand, we have a positive MACD signal. The MACD histogram shows a value around 0.0011. This, my friends, is a sign of early bullish momentum. Even though the general trend seems sluggish, energy is accumulating under the hood for an upward move. On the other hand, we are squeezed in a vice. Support level 0.1, 0.08. This is the critical zone. If we fall below 8 cents, the bears could drag the price even lower to the annual lows. Resistance level 0.13. This is the very wall we need to break through. Analysts from MEXC and other platforms are setting a medium-term target for February around 0.14. That is a growth of about 27% from current levels. Sounds pretty good, right? But to get there, HBAR needs to not just hang around at 8 cents, but confidently secure itself above 11 cents in the coming week. The Bollinger Bands are currently narrowing, value around 0.29, which usually predicts a sharp movement. We are like a compressed spring. The only question is where it will shoot up to 0.12 and then to 0.14 or down. Deep dive. Why is 0.08 a gift? Guys, let's pause for a second and I will explain why I am so fixated on this number 8 cents. Many beginners look at the chart and say, well, it's falling. It's scary. Experienced players look at the same spot and see a gold mine. Here are 3 concrete arguments why the current price is not a falling knife, but an opportunity. Argument 1. Technical oversold conditions, RSI. Look at the RSI, Relative Strength Index. Right now on the daily chart, it is showing a value in the region of 32. For those who are not aware, anything below 30 is a zone of extreme overselling. The last time we were this low, do you know when? Before that very rally that gave 50% growth. The market is literally screaming that the sellers are exhausted. They have nothing left to push with. We are currently stomping along the lower border of the Bollinger Bands. Historically, touching the lower line with such a low RSI led to a bounce to at least the middle line in 8 out of 10 cases, and that is already 0.11, which is an easy plus 20% out of nowhere. Argument number 2, fundamental undervaluation, TPS versus market cap. This is my favorite metric. Let's compare price and utility. In 2025, HEDERA processed an average of 3,000 transactions per second, TPS. Now, in early 2026, after the launch of new use cases, the network is capable of digesting many times more, and real activity has grown. But look at the market capitalization. It has hardly changed since the times when TPS was 10 times lower. The market values HEDERA as if it is still an experimental project, although in fact, it is already an industrial conveyor belt. This dissonance cannot last forever. Either TPS will fall, which is unlikely given the line of corporations, or the price will catch up to real utility. According to fair value models, considering the current volume of transactions, HBAR should cost at least 0.15, 0.18 today. We are buying $1 for 50 cents. Argument 3. The compressed spring factor in macroeconomics. Do not forget the external background. The Federal Reserve System, in 2026 is conducting a softer policy than expected. Inflation is under control, liquidity is returning to the markets. Usually, altcoins react to this with a delay after Bitcoin. Bitcoin has already played its part, but HBAR has not. We are in a phase that traders call wick-off accumulation. Do you see these boring sideways movements on the chart? This is whales, large players, quietly filling their bags without making noise. As soon as they build their position, a sharp breakout upward will begin, and it will be too late to jump in. So, buying at the 0.08 is an entry with minimal risk. Your stop loss, the level to cancel the scenario, is very close somewhere at 0.075. If we fall lower, you exit with a tiny loss. But the growth potential, take profit, is open up to 0.14 and higher. The risk-reward ratio here is 1 to 5. You won't find deals like this on the market right now, even with a flashlight. Block 2. Fundamentals in technology. What are they building in 2026? Now, let's step away from the charts and talk about why this asset should grow at all. After all, price does not live in a vacuum, there are technologies behind it. It is 2026, and HEDERA continues to roll out updates. Have you heard about the virtual mega map? This is part of the version 0.65 update, which is currently being actively discussed in the roadmap. To explain simply, previously, data in the network was stored in different structures, which was effective but not ideal. The virtual megamap unites all entities' tokens, smart contracts, files into one giant virtual map. Why does an investor need this? It simplifies the proof of network state proof. It makes the network even more transparent and easier to audit. For large corporations, enterprise, on which HEDERA has always bet, this is critically important. The simpler and more reliable the data structure, the more willingly they build their billion-dollar systems on it. Another important thing is block streams, HIP 1056 and HIP 1127. This is the unification of how transactions are recorded and broadcast. It sounds boring to the layman, but for developers, it is manna from heaven. It allows for the creation of more complex DeFi applications that work without failures and data duplication. Speaking of developers, right now preparations are underway for the Hello Future Apex 2026 hackathon. The theme of this year is DeFi and tokenization. The organizers say plainly, stop making just protocols. Make interoperable systems. They want to see cross-chain bridges, synthetic assets, and programmable payments. The prize fund there is solid, thousands of dollars for the first places, but the main thing is not the money, but that the winning projects often become the new unicorns of the ecosystem. If in the coming months you see an announcement of a cool new DEX or lending platform on HEDERA, most likely, it was born at this very hackathon. Block 3, the main event of February, HEDERA Dev Day Denver. And now, mark this in red on your calendar. February 17, 2026. Remember this date. In Denver, Colorado, HEDERA Dev Day will take place. This event happens side by side with the legendary ETH Denver, the largest gathering of Web3 developers in the world. Why is this important for the HBAR price? Networking and partnerships. When HEDERA comes to Ethereum territory, they don't just hang out. They poach developers. They show, look, our transactions are cheaper, the speed is higher, and now we have all the tools you are used to. Announcements. Often, it is at such events that the team makes loud statements. We might hear about new members of the governing council or the launch of major pilots that were tested in late 2025. Hype, any noise from Denver instantly spreads across Twitter and Telegram. Considering that the price is currently squeezed at the 0.08 level, any positive news from Dev Day could be the trigger that sends us to 0.14. We know that in the fourth quarter of 2025, HEDERA held 12 industrial events. They were preparing the ground. And now, in February 2026, we should see the fruits of this work. We expect news on real-world asset, RWA, tokenization. This is the trend of the entire year of 2026, and HEDERA is one of the leaders here. Block 4. Forecast for 2026 0.2 or 1. Let's look a little beyond February. What awaits HBAR in 2026 as a whole? I shoveled through a ton of forecasts from algorithmic to expert opinions. The spread, as always, is wild, but there is a grain of common sense. Conservative scenario. Most models agree that the average price in 2026 will be around that 0.18, that 0.2. That, mind you, is a doubling from the current 8 cents. 100% growth. For a conservative investor, this is a gorgeous result. Optimistic scenario. There are analysts who believe in breaking historical maximums. Some models, for example, StealthX, even draw numbers from 0.49 to 0.93 by the end of the year, if a massive wave of adoption begins. But let's be realists. For this, we need a full-fledged alt season and Bitcoin far beyond 100,000. The main driver of growth this year is not just speculation, but enterprise utility. The more transactions per second TPS, real businesses, not bots, generate, the more valuable the network is. In late 2025, we saw a surge in active wallets. If the trend continues in the first quarter of 2026, then the target of 0.2 by summer looks more than achievable. Conclusion: what to do right now? So, let's summarize for today, February 5. Price 0.08. This is a buy zone for those who believe in the medium term. There is a risk of falling, but support at 0.08, 0.1 looks strong. Target: we are waiting for 0.14 in February-March. Watch for a breakout of the 0.13 level. Once we break it, we will fly fast. Events: watch the news closely starting February 17 from Denver. This could be a catalyst. Strategy: do not panic because of the current boredom on the chart. This is the calm before the storm. Bollinger Bands do not lie. Volatility will return very soon. Personally, I am keeping my finger on the pulse. If news appears from the hackathon or insiders from the governing council, I will immediately make an emergency update. But for now, we watch, analyze, and hold HBAR.